If you've ever wished for a robot to clean your house or walk your dog, you'll understand why a robo-advisor appeals to you. These services don't do windows or pet sitting, but what they do provide is perhaps more valuable: a hands-off approach to investing. Robo-advisors, often known as automated investing services, design and manage your investment portfolio using computer algorithms and software. Services such as automatic rebalancing and tax optimization can be provided with little to no human interaction. However, many providers have human advisors on hand to answer inquiries. Traditional portfolio management services frequently have high minimum balance requirements. Robo-advisors typically have minimal or no minimum balance requirements. Because of this, as well as their inexpensive charges, robo-advisors allow you to start investing immediately, in many cases, within minutes. If you want but cannot find a human advisor who meets your needs and values, a robo-advisor could be an option for you. For example, HBCU Legacy is a robo-advisor aimed at students and alumni of historically black colleges and universities, while Elevest is aimed at female investors. Are robo-advisors a good investment? Consider the following when deciding whether a robo-advisor is worthwhile. Fees for robo-advisors and account minimums. Robo-counselors are far less expensive than human financial advisors. Most firms charge an annual management fee of between 0.25% and 0.50%, while there are free choices available, such as Sophie Automated Investing. Fees are paid as a proportion of your assets under the robo-advisor's care, as with many other financial advisors. For a $10,000 account balance, you may pay as little as $25 per year. Typically, the price is deducted from your account, prorated, and charged monthly or quarterly. A robo-advisor normally does not charge transaction fees. In a conventional brokerage account, you may be charged a commission to buy or sell investments, both during portfolio rebalancing and when you deposit or withdraw funds. These fees are frequently waived by robo-advisors. Some robo-advisors need an initial commitment of $5,000 or more, while some have no required account minimum and others have account minimums ranging from $100 to $500. Hands-on investing versus automated investing. If you want to start developing your money but aren't sure where to begin, robo-advisors can be a good place to start. When you sign up with a robo-advisor, the first encounter is almost always a questionnaire aimed to determine your risk tolerance, goals, and investing preferences. Rather than you researching which stocks or funds to buy, robo-advisors create their portfolios mostly with low-cost exchange-traded funds, ETFs, and index funds, which are baskets of investments that try to replicate the performance of a stock market index, such as the S&P 500. In addition to the robo-advisor's management fee, you'll pay the costs imposed by those funds, known as expense ratios. Robo-advisors often give 5 to 10 portfolio options ranging from conservative to aggressive. Based on your responses to the questionnaire, the service's algorithm will recommend a portfolio, but you should be able to veto that advice if you prefer a different alternative. Opening a brokerage account may be a better alternative if you wish to pick your own investments. Online stockbrokers with no account minimums and free trading are available. You'll have to do your own stock research and portfolio management, but you'll avoid some of the expenses associated with robo-advisors. Is a robo-advisor appropriate for you? It depends. Do you want to be an active investor? Or do you like to be hands-off? A robo-advisor may be a good option if you want to set it and forget it. Many advisors follow the same formula: automate investment management so that it may be done by a computer at a reduced cost. Most robo-advisors will provide regular rebalancing of that portfolio, either automatically or at predetermined periods, such as quarterly. Most advisors do this using a computer program, ensuring that your portfolio never deviates from its original allocation. Retirement calculators are examples of financial planning tools. Tax methods such as tax loss harvesting, which includes selling unprofitable investments at a loss to balance capital gains taxes on sales of winning investments, are examples of tax strategies. The majority of robo-advisors manage both IRAs and taxable accounts. Some also manage trusts, and a few will assist you with your 401k. It all comes down to whether or not you want automated portfolio management. If you don't want to manage your own portfolio but want or need more extensive financial planning than a robo can deliver, consider online financial planning services. What precisely are online planning services? These firms provide online financial advice and are a combination of robo-advisors and traditional advisors. You'll have unrestricted access to a team of financial planners, or, in many cases, your own dedicated financial advisor, but you'll meet digitally rather than in person through phone or video. Human monitoring and engagement are provided at a higher expense than a robo, but at a lesser cost than a traditional financial advisor. The cost and minimum investment needs of online financial advisors are likely to rise as the level of human participation, certification, such as access to a certified financial planner, and personalization increases. Facet Wealth has a $0 minimum and provides each client with a professional certified financial planner. It charges a price ranging from $2,000 to $8,000 every year, depending on the complexity of your planning requirements. You will receive personalized guidance and a comprehensive financial strategy, as well as investment management. Charles Schwab Intelligent Portfolios Premium provides you with access to a team of advisors that will create a personalized financial strategy for you and manage your account. Schwab requires a $25,000 account balance and levies a monthly flat cost of $30, plus a $300 one-time planning fee. Vanguard Personal Advisor Services provides access to a team of financial experts. You will receive a personalized financial plan, portfolio management, and financial planning tools. These hybrid services can be an extra choice because they fill a significant gap left by solely digital robo-advisors. Some investors desire and require human interaction. How do you feel about turning your investment decisions over to a robo-advisor? Have you already set up a robo-advisor? Leave a comment below. Take care and remember that your money matters.